Welcome to today's video. Welcome to Madelon Talks. My name is Madelon Vos and today we'll discuss the most important crypto and macroeconomic news of this week. We will dive deeper into the highly volatile small and mid-cap coins, and we will take a look at Coinbase because the price of Coinbase is kind of going down the drain. Also, there's a lot going on about the banks having a bit of if you can beat them, join them momentum. And in the end of this video, we will take a look at stagflation because I kind of have the feeling that we're in the middle of something that could cause stagflation. And stagflation is even worse than inflation. By the end of this video, we will take a look at the charts. We will watch Bitcoin. We will take a look at gold and take a look at silver. But for now, I'm going to make myself a little bit smaller and put myself in the right corner of this video. And you can have the opportunity to push the subscribe button down below. It's over here and you can click on the bell so you'll get notified every week when there's a new video online. Okay, we're going to start by looking at CoinMarketCap today. And when I was preparing this video yesterday and doing all the research, we saw that there was an ocean of red. And right now, it's kind of green already. We've seen some major altcoins like Ethereum, like Cardano, Bitcoin Cash, Litecoin doing great over the last 7 days. Oh, I even forgot Dogecoin. It did the best with a plus of 83.90%, which is insane. Doji has seen an increase of over 10,000% since the beginning of this year. So that's insane. And we saw a flipping between XRP and Dogecoin. They flipped, so the market cap of Doge is now higher than the market cap of XRP. And we even were on the verge of doing a flipping with BNB yesterday. But right now we see that BNB is getting quite bigger when looking at market cap again, but maybe the flipping will come. But keep in mind that we have the event of Elon Musk on Saturday Night Live, and this could make some changes when looking at the altcoins as well, maybe even buy the rumor, sell the news effect. And when looking at Bitcoin, it looks like Bitcoin is pushing all the other coins upward, and then they will even run more. When looking at Plan B stock to flow model, we see that we're still great. We're still sitting at the right timing. We are on these 3 dots right now. You see these here as well, and May hasn't ended yet, so we can still see a higher dot over there. But for now, we're really going sideways, which is great to get more momentum to move upward again. When taking a look at Bitcoin, Michael Saylor said something really interesting. The CEO of MicroStrategy was on an interview with Kaiko News, and he said, I think Bitcoin is going to be the emergency strong money store of value in the 21st century. And what does he mean by saying this? I think it's pretty clear that it has won this space. There are 8 billion people that need a strong money or monetary asset if they're going to live a decent life. And then he said that asset needs to be digital, and it needs to flow to 8 billion mobile wallets. But that doesn't necessarily mean that it needs to be Bitcoin, right? But he's saying Bitcoin is the fastest growing, most disruptive force in the world right now. So did you realize that that's true? Because he's saying, objectively speaking, it went from 0 to 1 trillion in 12 years. And that makes it the most disruptive tag in your life, in my lifetime. More disruptive than Amazon, Apple, Facebook, and Google. More disruptive than anything in our lifetime. And this is really interesting that he says that Bitcoin is this disruptive. So you realize how much money is flowing into this market and why it's so important that Bitcoin is here right now, and that's here to stay. Once you understand that Bitcoin is a crypto asset, then you understand it's not competing with the US dollar. So he is seeing Bitcoin as an asset, not as a form of money, in my honest opinion. He's more looking at it from a monetary perspective, and I agree with it. But you have several phases when looking at money. It needs to be a store of value before it can be transferred as money, and the volatility needs to be way less than it's right now. But he says that it's not competing with the dollar and the euro, it's competing with gold, silver, ETFs, and stocks all together. It's digital gold, it's a digital form of gold. To me, Bitcoin is everything combined. It's not only a store of value, it's not only a payment mechanism, it's where politics, economics, and being free all comes together, in my honest opinion. And he says large governments are going to be concerned with stable coins, like the ability to move billions of dollars. So large governments are not going to be concerned with Bitcoin. That's what he's saying right now. And I kind of agree on that, because we've, of course, seen Turkey banning Bitcoin payments. They haven't banned Bitcoin, they've banned Bitcoin payments because their economy wasn't strong enough. When looking at Turkey, there was so much going on with the lira falling, what was it, 16% in 1 month compared to the other year, the same month. So the price of, or at least the purchasing power of the lira went down by 16%. And people said, I don't need the lira anymore. Just give me Bitcoin. So there was a separate economy that was evolving. And that's why they banned, or at least they didn't say it in an official statement. But in my honest opinion, that's why they put the ban on Bitcoin payments. And large governments will probably never experience an inflation of 15% following the official figures. But it's kind of interesting that Michael Saylor is this positive still about Bitcoin, even though the price went down for the last couple of months, or at least sideways, not even down. It's going sideways and it's building momentum, because if we take a look at what it has been trading and take a look at the peaks from the last bull run, then we see that the supply is going down quite a bit. And after a halving, we see we mostly see 3 peaks, as you can see on this realized cap hodl waves. You see that here we had the first one, second one, third one, here again, and now we probably see wave 1, and we're waiting for wave 2 again. And when looking at the outflow from exchanges, the data from CryptoQuant supports the above, because there has been 12,000 BTC going from not only Coinbase but also from other exchanges to cold storage. This means that the strong hands are getting more coins. What the statement says, coins are moving from weak hands to strong hands. We are massive midway consolidation of this cycle. Don't let short-term price action freak you out. This bull run has a long way to go before it's becoming overheated. So hodl on. That's what they say. And we're seeing that there is a lot of Bitcoin moving to the cold storage, into cold storage again. And when talking about Coinbase, by the way, we have seen that the price of Coinbase went down so fast after this news broke. The news that 11,000 BTC were moved out of Coinbase. So even though the price of Bitcoin went upward, the price of Coinbase is going downward. So it's quite interesting to see what happens if the Bitcoin trend continues to go upward again, if the price of Coinbase is moving together with that. As you might know, I've invested in Coinbase, and I will do so because then I will still be capable of following the news, and I'm invested in it. As you know the feeling. If you have invested in something, you always want to follow the news and the latest things. So that's why I also bought some stocks Coinbase, and I must say I'm probably going to buy some more, but still it's far nothing compared to what my Bitcoin portfolio is. But taking a look at what we've seen over the last couple of and last week there was quite a big announcement of the NYDIG together with a crypto custody firm working on making banks able to buy, hold, and sell Bitcoin for their customers, for their existing accounts. And we heard that what they're doing is making it simple for everyday Americans and corporations to be able to buy Bitcoin through their existing banking relationships. So if I'm using my mobile application to do all of my banking, I will then have the availability to sell, hold, and Bitcoin. It's almost like Revolut. You've probably heard of the banking app Revolut. And on Revolut, you can buy and sell Bitcoin or hold Bitcoin or whatever. It's quite expensive though, way more expensive than doing it on an exchange, but it's quite nice because it's in the same app within your bank account. And you can also change your vision to having Tesla stocks in your account. But you can also hold, for example, gold ounces in your portfolio or stocks or crypto. There's also an option to move your euros or dollars directly to crypto, which is, in my honest opinion, quite great. Even though it has nothing to do with being your own bank, still they are a front runner when looking at the future of wallets. So 6 years ago, I spoke about this in my Dutch video as well. 6 years ago, I was at a conference and Dave Birch spoke. And Dave Birch is one of the early inventors of the early Bitcoin. He's one of the inventors of early digital money. So e-money, what it was called. And he spoke about the future of wallets. So, and when looking at the future of wallets, following the statement of Dave Birch 6 years ago, the future will look like this. You will have wallets almost like a Revolut wallet in which different coins but also different assets are located. So you have the ultimate portfolio in one app. So you will probably have gold and silver and maybe even some Tesla stocks and some euros or dollars, and maybe you will own some Bitcoin as well. And if you need to pay something, you can click in your app which coin or which stock you would like to pay in. And the receiver of the money can say, I'm only interested in getting Bitcoin. And he will click in there in his app that he only wants to receive Bitcoin. And our apps will correspond with each other. And I will sell my Tesla stocks for the Bitcoin at the same time, and the seller will receive the Bitcoins. So he spoke about this 6 years ago, and right now it's almost looking like we're going into a digital age in which this is going to be quite normal. And Revolut is quite nice, but it's also quite expensive. And as I told you before, it's not about being your own bank anymore. So you will have the third party risk. And of course, this goes against the statement of Bitcoin of being your own bank. But still, we're in the beginning phase, and this is what the future might looks like. So right now, there are a couple of 100 banks that have been onboarded with the NYDIG. Their head of banking solutions said, with onboarding big players still ongoing at this moment, but hundreds of smaller banks have already enrolled the program. What we're doing is making it simple for everyday Americans and corporations to be able to buy Bitcoin through their existing banking relationships. So you will have your normal app and you can buy Bitcoin via your bank. If I'm using my mobile application to do all my banking, I now have the availability to buy and sell and hold Bitcoin. And it kind of looks like, and if you can beat them, join them. But still, it's quite an mind-blowing thing that this is really happening. But taking a look at the Bitcoin chart and taking a look at Rude is comparing the bull markets of 2013, 2017, and 2021. We are still in a sideways trend, in a trending market. It's what it's called when doing technical analysis, trending market. But it looks like we are going up pretty soon, and we haven't seen nothing yet. We of course have seen a new all-time high, which we hadn't when looking at the first cycle in 2013. So 2013 is completely different from what we see right now. 2021 and 2017 look comparable to each other. So we can see a move upward and then maybe a move downward again. We don't know what's going to happen in the future, but it's quite nice to keep this in mind and compare the bull markets. But keep in mind that the history doesn't have to be the same as the future, of course. When looking at the market cap, the percentage of Bitcoin domination, we see that the domination of Bitcoin is quite down. It's at 47% right now, and the interest in other altcoins has stabilized, even though the interest in ETH has increased quite a lot. And we're not even at 2017 levels, so there is still a lot of interest that can come into these markets. And keep in mind that we will blow a new bubble. There will be a new bubble and the price will go down again, but we don't know where the bottom of that price level is. Goldman Sachs, by the way, unveils new cryptocurrency trading team in a new employee memo. So Goldman Sachs is also moving towards crypto, and they aren't the only ones. A lot of companies are going, a lot of banks are going to get involved in crypto. So that's quite nice. I saw this tweet on Twitter, and I must say that I wasn't really sure if I wanted to explain this one, but I'm going to explain this one. The general population doesn't know what's happening, and it doesn't even know that it doesn't know. There is so much going on about the monetary system right now. There is so much going on which a lot of people don't know about until it's already too late. So what we're going to do right now is taking a look at the macroeconomic perspective, and I will unveil what's going on right now. So when looking at this tweet of Jeroen Blokland, we found out that the lumber price is increasing quite a lot. There isn't enough lumber, and of course we have supply and demand. If there is more demand than there is supply, the price will increase. But this is insane. This is an increase of 530% over year on year over the last couple of 12 months. And we're seeing the same in chicken shortage, and this sends prices soaring and restaurants can't keep it up. And besides the fact that there is not enough chicken, that there is not enough lumber, there's also not enough other products, let's say silver and copper. A lot of basis products that are used in a lot of other things like fridges or TVs or phones or cars. And if these basis products are getting more expensive, then everything else will get more expensive. The only good thing about lumber is that it isn't even used, right now it's not used that much anymore. But still, the prices of the end product will increase. And Ed van der Wald is tweeting, the consensus I'm hearing is that jobs miss is extremely bullish inflation. This is essentially all about lack of labor supply. So wages will have to rise to attract workers. We will see. And below that is an article about a restaurant owner that fears that they have no applicants for their 32K job. So the wage is too low for what you can purchase with that wage. Imagine being in 1916 and having one parent taking care of a complete household and women taking care of the kids. Right now, you have two people working their ass off and have just enough. So they have to save money for going on holiday. It's just enough. They just have enough money. So right now, there will be jobs that no one wants to fill because the purchasing power of the wage is way too low. And then we have something strange going on. There is a lot of inflation. So the prices of the end products will rise. We spoke about this last week, the week before, and the week even therefore. So what we see is that the silver, Wall Street silvers are buying more billboards to show what's going on with inflation. And to come back at this thing is, even though the Wall Street silvers are kind of meanish, in the basis they are right because they see what's going on, and the general population doesn't. Even they don't even know that they don't know. They don't know what's going on. They don't know why the prices are rising, and we do know. Taking a look at gold, the price moved above 1800. We will take a look at the chart sooner. But for now, it's good to realize that the price has moved above 1800. And this makes sense because if the market knows that there is inflation coming, they will move to commodities. They will move to gold. They will move to silver. And in my honest opinion, this is not only about inflation. This might be even about stagflation. And stagflation is a phase in which economic growth slows down, and that's what we see right now because the money printer has to go brr before, or at least they have to go brr, 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 brr. And it's like you have to, it's like monetary drugs. So you have to put drugs into the economy to get the same effect. You need more monetary drugs to get the same effect, and the effect will slow down. So we will see that the economy will slow down, the growth will slow down, and the unemployment will increase. Even when looking at this tweet, people don't have enough purchasing power with the jobs not increasing combined with the inflation, and this will slow down economy even more. So what's stagflation? Stagflation is a period in which the economy will slow down, the unemployment rate will increase, and inflation is quite high. So it's which is at the same time accompanied by rising prices. Stagflation can also be an alternatively defined as a period of inflation combined with a decline in gross domestic product. And in 1970s, we saw that there was a lot of stagflation ongoing. How did they fix this? Because it's really hard to fix these things. You have the inflation measures and you have deflation measures. But if you have those problems at the same time, the more money you print, the more inflation you will create. But the less money you print, the less, the more unemployment you will create. So the less productive you will be, the more the gross domestic product will decrease. So how can you get out of this? And the only way to get out of this is what we saw in 1970. And I asked on Twitter, does anyone know how they fixed the stagflation problem of high unemployment and high inflation in the 1970s? And the Middle Cope tweeted, Google Paul Volcker to rescue. He did something that's unprecedented. He increased the rates until almost 20%. So the rates of the interest increased with almost 20%. And now I want to show you something. And this is Treasury Secretary Yellen. And Mrs. Yellen spoke on the Future Economy Summit about the future of the economy. And she spoke about interest rates. And this is quite interesting because listen to what she said. You probably, by the way, before we start the video, you probably know that the interest rates can't increase. If we increase the interest rates, a lot of countries, but also a lot of citizens, a lot of companies will default on their debt. We are in a debt economy. So the higher the interest rates, the more we have to pay and the more money must be created. But listen to what she says.
And, it may be that interest rates will have to rise somewhat to make sure that our economy doesn't overheat. Even
she says make sure that the interest rates have to rise a little bit to make sure that our economy doesn't overheat. And when talking about overheating, the economy is talking about inflation. And she knows that there is inflation. They changed the way to measure inflation. They changed the way to measure the money supply. And they don't do this because there is nothing ongoing. She wants to increase the interest rates, and this is gonna be a huge thing. And what she's doing right now is telling the market we might increase the interest rates so the market is prepared for what's to come. So we right now know that we're probably in a phase of stagflation, and it's really hard to get out of this phase of stagflation. So we must bear in mind that if this is true and if this is correct, what I just analyzed, then this means that your money at the bank isn't safe, that your money in euros or dollars is going to be worthless, and that you must take a look at other assets. And the market is doing this already. The market is looking for gold, silver, Bitcoin, hard assets. And we can't imagine about what's coming in the next couple of months or the next couple of years, but they will probably be very interesting. For now, we will take a look at the chart, and we will start by looking at gold USD, and I will show you what I drew on this chart. Here we had this downward trend, and we've seen this downward trend a couple of times after we saw an increase in price. And here, this was quite a long one. And after that, we did exactly as predicted. We did exactly the thing I spoke about. You can just watch the videos a couple of weeks ago and take a look at what we were sitting at that point. We were sitting at this point when we started doing videos, I think. And I already said we are double bottoming. So right now we're going to move upward. What we see is this head and shoulder formation breaking out upward, and this has everything to do with the underlying factors. It has also something to do, of course, with breaking out of this head and shoulder pattern, but we are on our way to 1900, we are on our way to 1900 USD when looking at gold. We're going to take a look at silver because the Wall Street silvers are looking at silver for quite a long time. And when looking at silver, we are still in the middle of this pattern. So when looking at silver, we are on the verge of breaking out upward from this triangle pattern. So when looking at this triangle pattern, you can do a calculation. If we break out, so we don't anticipate in buying, we wait before the breakout, and then we will reach a new high of 30,000. And if we break out upward, we will see a new high of 33 on the silver chart. So completely bullish, and the underlying factors, so the fundamental analysis is saying that the only way that gold, silver and Bitcoin can go to is upward. And if we take a look at Bitcoin, and when taking a look at this rising wedge, we've seen that Bitcoin broke out downward. We hit the target point at around 80%, then the price moved upward again. We saw this head and shoulder pattern, which could bring us to 62,000, but we went down quite a bit, and right now we're struggling around this level. These ones right now we're seeing this pattern, And this is probably some sort of rising wedge within this ascending triangle. This looks like a rising wedge, so we can go down more, test this bottom again, and then move out upward. But it's quite hard to say because it looks like an ascending triangle, but the tops need to be horizontal. If the tops are horizontal, you can say this is an ascending triangle. But if the tops are higher and the bottoms are higher as well, then it looks more like a rising wedge. But for now, I must say this looks more like an ascending triangle to me. And if this is an ascending triangle, then the chance of breaking out upward is higher than the chance of breaking out downward. If this is a rising wedge, this bigger one, if this is a rising wedge, then we will probably break out downward, but because that's more likely if we take a look at technical analysis and take a look at what has happened in the past. But for now, I'm quite bullish still. We can revisit 55K and then go upward again. But for now, it's still quite bullish. Same for gold and silver, but gold and silver look way more bullish in my honest opinion. Oh, we are almost might be on the verge of breaking out. That will be insane. We really want to see a price higher than 60K. If we reach a price higher than 60K, that will be great, but I'm not really sure. The volume is declining. We need high volume if we want to overcome this level. So right below 60K, then we can move out upward, and then we will reach like at least 62 or maybe even 63K. But for now, it's quite hard to say if we're going to break this one, but we probably won't because the volume is declining quite a lot. But keep in mind that if we reach a level that's higher than 60K, we will probably see new highs. So that will be the perfect entry point. And if we go down below this level, this will be the exit point. And here we will have a new entry point as well. Oh, and by the way, I've had a lot of questions about my favorite exchange when doing spot market trading or futures trading or even leverage trading. If you want to know more about the futures or the leverage trading platforms I use, I would really recommend you to only take a look at this if you are an experienced trader. I have some links down below so you can support the channel as well, and you will get an extra bonus. I got the links down below here, so you will get a bonus of, I think it was 1900 USD. So that's great. Take a look over there if you want to. And for now, I'd really like to thank you for watching. And if you haven't subscribed to the channel, make sure to do so. If you don't follow me on Instagram or Twitter already, make sure to do so you will get notified about the last things that are going on in the market. I will do some analysis on my Instagram and on my Twitter as well, on almost a daily basis. So that's great to follow if you haven't followed me already. So for now, I'd like to thank you for watching this video. Also make sure to push on the subscribe button down below, and I hope to see you next week.